The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we got some positive money flow in the grain trade led by soybeans and soybean oil on Tuesday. Also a decent day across cattle and hog futures as well. So I think we could safely call it a risk-on type of day in grains and livestock. We're going to talk about all of that. We got CPI data out as well on Tuesday to discuss. Joining us for a conversation, Jim McCormick with agmarket.net here on Market Talk. Jim, it's good to catch up with you again, my friend. I hope you're doing well.
Doing well, Jesse. Thanks for having me on. I know last time we were together, we were down there in your neck of the woods in Nashville. So it's nice to see you on the TV. I got to tell you, right here in Chicago, it feels a little bit like Nashville right now. They're talking temperatures up near 70 here today. So a little bit of taste of spring right side of Chicago. Now, as we get closer to St. Patrick's Day, it's going to be a little bit back to more normal temps. But it's definitely nice to see a little bit of taste of spring up here.
Well, I have to think that taste of spring is maybe continuing to spur on some early field work for some folks. I know that's been a chatter amongst the farmers and the traders here the last couple of weeks. And so we'll see how that all shakes out as we get into spring planting season. And, you know, a little bit of positivity in these markets on Tuesday for us to take a look at as well. So spring fever and maybe a little bit of spring in the market step here, so to speak, on Tuesday. Soybeans and bean oil kind of the leaders. Quarter wheat set back a little bit. I have to wonder, just off the top, those CONAB numbers from Brazil that saw production cuts on Tuesday. Was that maybe the start of some of the positive money flow on Tuesday's trade, Jim? What do you think?
I think it definitely got the trade's attention. I mean, what the Brazilian governor put, CONAB, put that crop, about 146.9. The USDA is at 155. I mean, they are a mile apart at this point in time. And there's no doubt about it. If the CONAB number is accurate, you should put a little bit more premium back into the marketplace. And I think the market responded favorably to it. I think that was part of the fuel. Then technically speaking, Jesse, you could draw downtrend lines on these old crop beans and the new crop, and you took out that downtrend line. So you started accelerating some technical buying. The Commitment Traders Report on Friday showed, I believe, the funds carrying their biggest short position ever. Now, that was as of last Tuesday, and they're taking another shot at today's close. But, you know, either way you look at it, they're carrying this huge short position. You got a fundamental story that's crops getting a little bit smaller in Brazil. You got a technical story that's turning a little bit more positive, taking out that downtrend line. And now it's hard to believe, but we're racing to the end of the month, into the quarter very, very fast on these March contracts or this March month time period. So you're probably seeing maybe a little, profit taking coming off the funds books as well.
Yeah, and thinking about some of that fund movement here, that's really been the big catalyst in this market across the board since really the end of 23, at the beginning of this year. Those funds have just kind of had this chokehold, so to speak, on the grain markets here. But to your point, getting through some moving averages, some key points here, maybe getting a little bit of fund movement here that's making it a little bit easier in this overall grain market environment, Jim.
Well, exactly. I mean, that's who was pressuring the market. I mean, if you look at it, I know there's a lot of seasonality. A lot of people are expecting this market coming to the beginning of the year. You traditionally see a little bit of premium come into the market. Instead, the funds went the other way, and they just essentially sold all the grain markets very, very aggressively, pushing these price levels to the recent lows. But as we've seen, as they've pushed their max positions, they've run out of sellers. And at this point in time, they're starting to cover that position a little bit. In the meantime, the farmers, they were forced out of a lot of their March contracts here a couple of weeks ago on the first notice day. And, that always happens all the time, it feels like, as people get forced out at the tops and bottoms. And I think that kind of set the stage for the bottoming action. And now I think you're moving into the system or the time frame, Jesse, where the market's going to start unwinding some of these master shorts and maybe put a little bit of weather premium in the market. It is, the harvest is going on pretty good in Brazil, but like on the safrinha corn crop, it's just finished being planted. We'll see how that weather plays out. Right now, the next 10 days, Brazil, from the forecast I've seen, the latest one is relatively warm, dry conditions for the next 10 days. Now, if you go further out, day 15 to day 20, their maps are trying to put rain in the forecast, but anybody out there watching knows when you get into that 10 to 15 day portion of the map, it's more of a crapshoot than an actual forecast. So we'll see. And then on top of that, look what's going on in the Midwest. If anybody is, kind of dug a hole or did any kind of field work this summer, or excuse me, this winter, I should say, because it was such a mild winter, there's not a lot of subsoil moisture in our corn belt as well, which I think should also generate a little bit of short covering and maybe a little bit of weather premium coming back into the market.
So, Jim, thinking about this grain and oilseed trade, and I'm kind of putting this together as a whole here, but with spring planting, we're right on the doorstep of that. Some of this weather concern, maybe for safrita quart, et cetera. I mean, talk to me. Let's talk risk management here a little bit. I know a lot of farmers still remain very undersold, both old and new crop. So what should they be thinking about here before they get real busy with planting? We don't want folks to get complacent. I mean, what are some things they need to really consider here with their marketing plan in terms of corn, soybeans, wheat, et cetera, Jim?
All right, now I think you got to figure out where you stand price wise. And what I mean is you kind of got to look at it as more of a dynamic break even. I know a lot of producers at the beginning of the year will say, well, my break even maybe is $5 per se. Well, if you sold some, half your crop over $5, you can afford, maybe at $5.25 earlier this year, you can sell some of these later bushels maybe a little bit lower and still hit your target. So right now is a very good time to kind of figure out where your break evens are and where you want to try to sell the corn. Now, it may not get at the price level they want, Jesse, but the reality is you need to we're recommending get the orders working, because if we do get a rally, it's probably going to be relatively short-lived. We're 30, 35 cents off the low already. It's pretty amazing. It's like, wow, where'd that go? And that could happen. You can another 30 cents into it. But, the producers right now, Jesse, they're getting in that time period where they are not looking at the markets. They're trying to get prepared for fall, field work, trying to get this crop planted. As we push into the latter part of the month, it's only going to increase. And, there's a shot where that price level that producer may want to or need to hedge at, it may happen. Heck, it may happen in the night market. So we're encouraging people, before you get really busy, really, grind it out, find out your break-even numbers of where you want to try to get grain sold, both for old crop and new crop, and get those orders working. Now, today, you might have noticed, Jesse, the corn market surged early in the day, and then it did back off a little bit. Well, interesting enough, our counterparts over at JSA were made note that some of their elevators said they had some of the most busy day they've had in a very long time. So when D24 corn got up near 475 today, we saw some hedging come in. And I think the same thing for the old crop. So producers are putting layered in orders to sell it. And I think that's the pragmatic thing to do. I think, because the one thing I'm a little bit leery about with this rally is I think hopefully it'll continue, but we've got a huge report at the end of the month, quarterly grain stock and acreage. And that could be a change dramatically in the psychology of the market. So if you can get that rally up and lay some risk off before that report, I think it's a good thing to do.
Yeah, that end of the month, I feel like it's always traditionally very volatile. And Jim, it feels like this year more so than maybe previous years, that could be a very, very big pivot point for market fundamentals, can it?
Well, it can. I mean, if you look at it, there's a lot of debate on what the acres are going to be. A lot of people think corn acres are going to be less. The risk is we haven't got the average trade guesses for the report, but let's say the trade's looking for 3 million, 4 million less acres, and the government only comes out at 2 on the survey. That could change the psychology. The other thing we're looking at is quarterly grain stock report. We never know what that report's going to say. We'll be honest. We just don't know. It is a crapshoot. It's feed, get residual, kind of get moved around. That can surprise us. It's also, to add to the complexity, it is that report's being dumped on Thursday, Holy Thursday, will be closed for Good Friday. So you're doing that report right into a 3-day weekend. And I'm a little bit nervous that as we come out of that 3-day weekend and we happen to get a bearish report, and we're really getting these planters rolling in that kind of the plant in the dust, bins will bust mentality, it will be very hard for the market to rally. So if we get a rally over the next couple of weeks, we're going to encourage people to use options or actually just futures, cash, whatever it is, to essentially mitigate some downward risk going into that report.
We're having a conversation today with Jim McCormick from agmarket.net here on Market Talk. Jim, consumer price index data out Tuesday morning, mostly in line, maybe slightly higher than some of the trade expectations. It just feels like sticky inflation is still kind of here. Fed meets next week, probably not getting a rate cut, probably not getting one in May. Maybe this summer we could start to see some rate cuts. Your thoughts overall on just how this overall sticky inflationary environment's kind of continuing to impact everything, not just the ags, but everything as a whole, Jim.
All right, now, inflation's still been a problem. And like you said, the number of sticky is the word I like, is the common word everyone's using. And, it wasn't outlandish. I mean, compared to where we were a year ago, inflation, it's still, it is getting under control. But yeah, I mean, the stat I saw, I think, a couple months ago, there was up to a 60, 70% chance that they were going to lower interest rates in May. Now, I think after that number came out today, I think the guess is less than 20% odds. So, I mean, unfortunately, if you're a producer out there and you need to borrow money, it's not going to get any cheaper anytime soon. I think the odds are still high that potentially you could see some cuts later on in the year, but we'll see. I mean, the big fear Jesse, I think the Fed has, is they don't want to let off the brake too hard. I mean, that's essentially what they're doing. By raising the interest rates, they're trying to slow down the economy. But what their fear is, if they let that break off too quick and essentially start cutting, you're gonna bring that Gini inflation right back in, which is kind of what happened in the 70s and 80s. If you look how inflation went, you kind of had a big spike in the late 70s. It pulled back, and then it exploded into the early 80s before they raised interest rates to dramatically high levels to essentially kill off inflation. And I think the Fed is very cognizant of letting off that, essentially cutting rates too soon. But I think the odds from what I'm reading are still relatively high that we will get a cut. Overall, the economy, you've got to say, is still working very, very well. The jobs number overall was very strong, better than anticipated. Unemployment numbers upticked a little bit, but still near 40, 50-year lows. Stock market, which is not a gauge of the economy, but the stock market does kind of give you a little bit of viewpoint of how the market views the overall growth of the economy. You're trading at all-time highs. So, in the big macro picture, you got to admit the U.S. is doing quite well, and better than pretty much any other economy out there coming out of COVID. Can they keep it going? That's $1 million question.
That is $1 million question. Well, and I wonder too, we think about inflationary type pressures in the outside markets and how that affects the meat markets. Livestock, cattle and hogs had a pretty decent day Tuesday. It's felt like these markets have kind of gone sideways as of late, though. Your overall picture, we kind of look broadly at cattle and hogs. I mean, what stands out to you in this window, Jim?
Well, I think sideways is a great way to define the market. That's kind of where we're at right now. I mean, it's kind of interesting. The cash market continues to be bid up. I mean, that shows you, I think, the tight supply of the cattle. The real question is, as that gets if they try to start passing along to the consumer, how far to the consumer balks? But the reality is, at this point in time, we're going to get a pretty good handle over the next couple of weeks. Probably your neck of the woods more than mine. Spring break's coming online. The college kids are on spring break right now. The high schools start kicking in the next couple of weeks, and it's going to be interesting to see the reports of how busy the beaches are, how busy the airports are. I'm betting they're going to be relatively packed. History would suggest that with a strong economy, and I think that's hopefully a good sign for the beef market. I mean, it's a kind of a good combination. If you're a producer, you've got a tight supply with a strong economy. Usually that is a pretty good indication for prices. Now, risk-wise, we've got, a lot of people are suggesting buying puts. I'm not against that as a risk management because the world is a scary place right now and there's a lot of uncertainty. But, so to manage risk is not the worst thing to do. But if you want my overall opinion of the market, I think you got to be a little bit optimistic going into summertime. Hogs, same situation right now. I think the cattle goes in there. The hogs are going to try to hang in there as well. We just don't have a whole lot out there, on supply. And then, the birds, I was talking to one of my clients in Iowa. We were talking about, we've got excess supply of corn. How are we going to get rid of it? It's like the animal units aren't there. And, the reality is he brought up the fear of bird flu. I said, that's a legit risk. I mean, the fact of the matter is it's very warm here in Chicago, but I was kind of checking, migratory birds don't really start moving around, moving from south to north till late April into May. So there's still that risk of essentially we've seen every spring and fall, it seems like, of bird flu ratcheting up. So, I mean, you can actually see the animal units contract even more. So, if you got a tighter supply of protein, the protein you've got usually increases in value.
Good thoughts. Jim, let's wrap it up. Anything final you want to share or reiterate with folks here today on the show?
I think the final thing I'm going to say, Jesse, is kind of what we talked about. I think if you're a producer out there, you're going to ramp up your time, is going to get very, 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 very busy. I guess the best way to put it, as we get into the April timeframe, get your orders working with your brokers, with your cash market. Get those, get those cash orders working. So, if the market does spike in the overnight market, you can take advantage of it.
Well, Jim, I know if folks have questions, they can reach out to you or the team there at agmarket.net. Take a look at your intel, phone call, a lot of great ways to get in touch and learn more, isn't there, Jim?
Excellent. That's it. Agmarket.net. I do want to plug, we do have a new app, or we're getting an updated app coming out here at the end of the month. You go to agmarket.net, you can sign up for that app, and we will get it out to you, at least a free trial of it, as well as our research. It's going to be a very critical time period in the next couple months, and some exciting time periods too, price-wise, hopefully.
Jim McCormick with agmarket.net. Always a pleasure to talk with you, sir. Thanks for joining us. Have a great week. We'll talk to you again real soon.
Thanks for having me on.
Jim McCormick there with agmarket.net. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.